Hello everyone, and thank you for joining us today. Now this promises to be a great presentation because today I'm going to share with you a technique that if you had added it to your trading with this particular stock, ZBH for example, as we see here, we would have had some very nice signals generated by simply adding this one technique here, 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 and even here. So as I stated, this promises to be a great presentation because I'm going to share with you how to add this technique to your candlestick trading. Thank you for joining us once again. My name is Steven Primo. I am the president and founder of Specialist Trading. And for those of you who are unfamiliar with our website, we are first and foremost an educational company. Our sole purpose is simply to educate members and students so that they can ultimately make their own trading decisions. So at Specialist Trading, you won't find any chat rooms or trading rooms. You won't find any reliance on outside sources that actually have no consistency to them. You'll just see sound fundamental education taught to someone with nearly 40 years experience in trading the markets. Now, I started out my trading career nearly 40 years ago on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. And if you're not familiar with what a specialist does, it simply is a market maker that makes markets in roughly 50 stocks at a time. So if you wanted to buy or sell a particular stock, you simply went to the trader who specialized in that. Now, I traded through the floor, on the floor through the crash of 1987 and the bull market that followed after that. I've traded straight up markets, straight down markets, sideways markets. I've traded every system or technique that you can imagine. So I know what works in terms of consistency and I know what doesn't. And so this is basically what we do at Specialist Trading. We teach and mentor all of our members around the world in roughly over 100 countries around the world in virtually every state in the United States so that they can basically put the power back in their hands. It's my opinion after trading for so long that the reason why most traders fail is because most traders rely on an outside source to tell them what to do or how to trade. I mean, think of it. Look at your own trading. Every day, do you go to some blog to tell you what the hottest issues are, what someone likes, what someone doesn't like? Do you go to a chat room to tell you what they're trading today or what the perfect time frame is? Do you listen to too much news to make a decision on whether you should buy or sell something? Or do you listen to some trading guru on TV tell you what to do? Every one of those different ways of trading is basically putting the power in someone else's hands, telling you what to do. What we do at Specialist Trading is put the power back in your hands so that you can ultimately make your own trading decisions, save a lot of time, energy, and especially money so you don't have to pay for these services. You can be in charge of your own trading. So this is what we do at Specialist Trading. Now I'm going to show you a great technique today. I'm going to teach you this technique so that you can really improve your consistency in candlestick trading today. But before we begin, as always, I ask that you please take a moment to view our disclaimer. We are required to show you this. So as you see our disclaimer right here, I'm going to show you a lot of performance results today using this particular technique with your candlestick trading. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So once again, we are required to show you this prior to each and every webinar. So while you're taking a moment to view that, I would also like to invite each and every one of you, if you haven't done so already, to follow us on Twitter. There's our handle right there. You may want to copy that down at SPCLSTTRADG. Each and every day I post different information, anywhere from financial wisdom to different tidbits I've accumulated along the way. From signals that our strategies have generated to different ideas that we are posting. Now, although Twitter is rather limited because of the way it's set up, if you'd like more detailed information, my sister site, which is Pro Trader Strategies, they handle all my marketing and promoting of my courses. They have put together a Facebook page. So you can simply log on to Facebook and go to Pro Trader Strategies, and there's a lot more educational webinars, videos, and information about myself, Specialist Trading, and Pro Trader Strategies. So lots of ways to find out about what we do, about myself, and to get more information, free information, and trading education. Now, as I stated, our only goal is to educate you. You're not going to come to Specialist Trading and we're going to talk about what the earnings report was that day, or we're going to talk about what the best time frame is to trade a certain issue. We don't believe in that. It's up to you to decide. Some traders love to trade tick charts. Other of our traders swear by trading weekly charts. There is no right or wrong answer in which to trade. In fact, we encourage everyone to find their own way. This is my experience in how traders become consistent, not on relying on an outside source, but on relying on themselves and their own knowledge which they've accumulated. So as you can see here, my goal is not to force feed you signals. My goal is not to tell you what the perfect time frame is. My goal is not to tell you what the perfect market is to trade. That's for you to decide. My goal is simply to teach you how to trade with a specialist edge. This is the same edge that was able to turn my trading around nearly 40 years ago, and that what has sustained me for nearly 40 years. And this is what I teach and mentor all of my students, the exact same things, okay? So now, as I said today, I'm going to teach you a really great technique that you can add to your candlestick trading that you can start using as early as today, as soon as we conclude this presentation. But as always, since this is an educational format, if you happen to have any questions, I kindly ask that you wait till the very end of the presentation to ask the questions. Many times, if you wait for the next slide, the question will be answered. And we don't want to bog down and slow down the references today. As I stated, I have a lot of slides to show you, a lot of ways to teach you how to use this technique. The only question I will answer is the one that's most commonly asked, and that is this being recorded? Yes, it is. We record all of our presentations. So if you have to leave early, or if you're having technical difficulty with your computer and the sound, don't worry, we will record this, and we are recording it right now, and we will send you a link. So go to Pro Trader Strategies. They're the ones that sent you the offer for this, an announcement for this presentation, and they will send you a link at the end of today. All right, so let's begin. Once again, thanks for waiting till the very end to ask any questions. Now we have to start out by asking a question ourselves. Does trading candlesticks with conventional wisdom work? In other words, most people who have applied candlesticks before have been taught a certain way in which to apply them. Myself included, when I first started trading candlesticks nearly 40 years ago, I was taught a certain way as well. But we have to ask ourselves, does it really work using conventional ways in which we've been taught? Now, if we look here at candlestick patterns, we'll just give a brief refresher course on the majority of candlestick patterns for those of you who are unfamiliar or don't use them that much in your trading. As we see here, we have everything from dojis to piercing lines to evening stars. We're only going to focus on one candlestick pattern today because we don't want to bog down and make things too complicated, especially for those people who aren't familiar with a lot of candlestick patterns. So we'll just use the most basic as well as the most popular and easily identifiable candlestick pattern, and those are engulfing patterns right here, okay? Just a brief refresher course on what an engulfing pattern is. Okay, it's a two-bar pattern. Now in this case, we have bullish engulfing patterns and we have bearish engulfing patterns. Now the example I have here is a bullish engulfing pattern. All right, as you can see, it's two bars. Now conventional wisdom usually tells us that the first bar closes lower. So in other words, in this candlestick pattern, you will open here and close lower as represented by the dark body. Now bar number 2 usually opens and closes higher. Okay. Now what you want to see is bar number 2's range, open to close range, totally engulf bar number 1's open to close range. Now we don't need to engulf the entire bar from the top of the wick to the bottom. We just need to engulf the open to close range. Now conventional wisdom tells us that bar number 1 should be a down day, bar number 2 should be an up day, but it really doesn't matter. Bar number 1 could be an up day as well. As long as bar number 2's open to close range totally engulfs bar number 1's open to close range. This is called a bullish engulfing pattern. And the reason why it has such a strong edge is because there's a high tendency that prices will continue in the direction of bar number 2 for the next 3 to 5 bars. Okay, so that's a great edge to have. Now conversely, if we want to sell, well then we look for the opposite, a bearish engulfing pattern. That is simply a 2-bar pattern. Bar number 1, usually by traditional standards, opens and closes higher. But in this case, bar number 2 opens and closes lower, as seen by the dark body here. Now all we're looking for is the open to close range of bar number 2 to totally engulf the open to close range of bar number 1. Once again, we don't need to engulf the entire range from top to bottom, just the open to close range of bar number 1. And once again, conventional wisdom tells us that bar number 1 should be an up day, but it really doesn't matter. It could be a down day. As far as we're concerned, all we're looking for is for bar number 2's open to close range to totally engulf bar number 1's open to close range, regardless of what direction. Now, the reason why this has such a strong edge is because there is a high tendency for prices to continue downward in the direction of bar number 2 for the next 3 to 5 bars. So this is a great edge to have, okay? Now let's look at the standard definition of engulfing patterns. Now, okay, this is the standard way we were taught, myself included. I know I was taught by someone who actually came from Japan and who worked in a bank in the 1970s, and who we didn't have high-speed computers and computers that actually had candlestick patterns then. All we had was scrolls and hand charts. So I had to look at hand charts in order to be taught. But I was taught the same way, that engulfing candlestick pattern is a reversal pattern. You see there in quotes. And it usually occurs at the top or bottom of a trend. So basically, we're looking to pick tops and bottoms. That's the beauty of candlestick patterns. For most intents and purposes, most candlestick patterns are reversal patterns. And in this case, we're looking to see at the top of a trend, we're looking to see a bearish engulfing pattern, meaning that there is a bearish sign that the upward trend will soon stop and go lower. And in a downtrend, we're looking for bullish engulfing patterns, so meaning that the downtrend will stop, we'll pick some type of a bottom, and we'll go higher. So as we look in this example here, this older example in CVX, we see that we're obviously in some type of a short-term downtrend, right? Okay, so we're looking at our candlesticks here, and what do we find? We find a bullish engulfing pattern. So conventional wisdom tells us that this should be the bottom of the downtrend because it is a reversal pattern. So taking this signal, and this is the way I used to trade when I first started trading candlesticks, what we would do is simply use this as a buy setup and go long, and look what would most likely happen. We go lower, okay? Does this look familiar to anybody? All right. Now, it would be very discouraging because I'd say, well, wait a minute, I'm doing everything I've been taught. How come this one didn't work? And then I would say, well, you know what? Maybe I got in a little bit too soon because the trend is still going lower. And guess what? Here's the real bullish engulfing pattern. So maybe I jumped the gun. This is the one I should buy. So I jump in and buy this one, and look what would happen. So what happens to the consistency? I thought it was supposed to be, you know, a bottom picking and a top picking or a reversal formation. Well, this is what I discovered, and this is the technique I'm going to be sharing with you today, because there really is no consistency in trading candlesticks the standard or conventional way. Trust me, I've done it for nearly 40 years, and there is no consistency. It will work every once in a while. But look at your own candlestick trading. I'm sure you've had difficulty and seen these same things happen. So, how do we increase our odds for success when trading with candlesticks? Candlestick patterns will have a higher level of consistency if you trade them in sync with the trend. Okay, I'm going to repeat that again. You may want to copy that down and post it onto your computer screen. Candlestick patterns will have a higher level of consistency if you trade them in sync with the trend. Now this goes against everything we've been taught. We were always taught they're reversal patterns, okay? You look for the top for a reversal or the bottom. This goes entirely against everything, but trust me, this is where you will increase your odds for success, by trading candlestick patterns regardless of what pattern they are. They could be piercing lines, it could be dojis, it doesn't matter, but trade them in sync with the trend. All right. Now here's where we fall into trouble, because everybody, every webinar, every educator, every trader out there has a different idea of what the trend is. Here are some of the basic trending tools, and they work okay. They have some certain levels of consistency. For example, you can use indicators. There are a lot of indicators that will tell you overbought and oversold tools that tell you what the trend is. Okay, so these are all fine. Moving averages are fine too. They can tell you what the overall trend is. There are also patterns. A lot of traders like to look for patterns within whatever you're trading. So in other words, higher highs, higher lows will signify some type of an uptrend. Lower lows and lower highs will signify some type of a downtrend. So this is fine as well. And then there's also time frames. Many traders love to use this technique where the only way you can find out what the lower time frame is doing is if it's in sync with the higher time frame. So as long as the two time frames are in sync with each other, then you know you have a valid trend underway. All right, they're all valid and they have certain levels of consistency, but in my opinion, there is a tool that is vastly superior to all of these. This is something I was introduced to on the floor nearly 40 years ago that my mentors taught me, and at the time it was a tool I had to calculate by hand. But now, you know, some 40 years later, we're able to change it into a color bar algorithm. It's the PET-D. You've heard me talk about it before. The reason why I do is because it is such an amazing tool for identifying the trend. As you can see here, when you have a series of green bars, There's nothing you have to calculate. There's no patterns you have to look at, no oscillators. There's no higher time frames to look at the lower time frames. All you have to do is look at the color of the bars. Series of green bars tell you we're in a short-term uptrend. Conversely, a series of red bars tell you you're in a short-term downtrend. It's that simple. There's nothing you really have to do other than just apply the PET D. Trust me, I have used this for nearly 40 years, and it has improved my trading in terms of consistency tremendously. Why? Because I am now in sync with the short-term trend. So, how do we apply it to candlesticks? Well, remember, once again, we're only going to be talking about engulfing patterns today, but trust me, you can use this for virtually any candlestick pattern, but let's just focus on one particular pattern, the engulfing patterns. So let's say we see an engulfing pattern. We know how to identify it, okay? Regardless if it's at the top or the bottom of a trend, we don't care. Here's how we're going to add our level of consistency. We are only going to buy if the engulfing bar, that's bar number 2, is colored green, okay? That's it. We don't care if every bar before that was red. It doesn't matter. If every bar before that is green, that's even better. But all we care about is that the 2-bar pattern, the engulfing pattern, bar number 2, has to be green. And that's it, okay? As we look here in this older example of SYY, once again, traditional standards would tell us, well, there's really no trend here, Steve. As you can see, we're going basically sideways. This is a rangy market. And the website that I subscribe to says always stay away from trendy markets. That's where you get in trouble, right? That's where you get whipsawed, okay? Well, that's true if you follow standard conventional wisdom, which, as we have seen, has no consistency to it. But if we add the PET D, we see here that we have a bullish engulfing pattern, and bar number 2 is green. Now remember, as we look here before that, there were a number of red bars. That's okay. We're not concerned with that. First thing we did was locate and identify a bullish engulfing pattern. Bar number 2's open to close range totally engulfs bar number 1, and bar number 2 is green. So we don't care if people are saying, well, Steve, there's not enough volume, or I don't like what the indicators are telling me, or this chat room says that it's in a rangy market, so I should stay away. Remember, those are all outside sources, and those things only lead you down the road of inconsistency. There's no proof that any of those things work. Why not stick with things that have stood the test of time, that have been used by traders for over 50, 60 years? So we apply the PET D, it's colored green, and as you can see, the stock went up 5 points in the next week, okay? Now conversely, what if we find a bearish engulfing pattern? This was where bar number 2's range from open to close totally engulfs bar number 1's range, but this time it closes lower. Well, we're only going to sell if the engulfing bar, which is bar number 2, is colored red. Once again, we don't care if every bar before that was green. We don't care. All that matters is that bar number 2 is red. So let's look at this older chart in DVN, all right? Now the trend is going down. Just off this short 2 or 3 weeks here, we can see that we're going lower. Conventional wisdom would tell us, well, we're looking for a reversal pattern. We are looking for bullish engulfing patterns only. But as I've shown you in those other charts, there's no consistency in that, all right? Stocks will go as low as they want. Trends will continue on for days, weeks, and months. Well, isn't it kind of silly to try and think you could pick a bottom? So why not just go with it? Why not just have the swim with the current at your back instead of trying to always swim upstream the way we've been taught? All right, so we see here, let's add the PET D. Well, first of all, let's identify some bullish or bearish engulfing patterns. As we can see here, we have 2 bearish engulfing patterns. Once again, conventional wisdom says, well, no, Steve, we're not looking for bearish engulfing, we're looking for bullish engulfing. But we don't listen to that tired way of trading anymore because we know it doesn't work. Now, all we have to do is confirm with the PET D, and we can see that the PET D has been red the entire time. There are, in fact, no green bars at all. So the trend is headed lower, so that means we want to go with the trend. We want to sell. So if you would have taken these 2 trades right here, well, that's a nice little profit to the downside. You know, you've got a nice profit. For the minute you went short, DVN continued to go lower from roughly 62 all the way down to 54. So you've got about 6 to 8 points in your favor right now. Now let's say you feel like, well, this is pretty good. I guess this is working pretty well, but you know what? I'm still just a little antsy about this, a little scared. We've had a really nice sustained downward move for the last month or two. I can't hold on to these short positions much longer. Plus, well, you know, I know Steve says not to worry about this, but I have two bullish engulfing patterns right here. So I'm going to cover my short here at 56, and I'm going to go long because it's bound to stop. You know, maybe this time it'll work. So you go long, and guess what? It goes lower. Why? Because this is the way we're taught. You want to find a reversal pattern in bullish engulfing patterns, and there's no consistency in that. It would be much better if all the bars are red, you simply look for continuation in the bearish engulfing phase, as you see right here. And even though the stock has dropped nearly 20 points, it continues to drop lower. In fact, 25 points in the next 2 months. So you see the level of consistency that you can generate if you trade candlesticks in sync with the trend as opposed to a reversal pattern. So let's show you some more recent examples. Those were the educational examples just to show you how this technique works. And let's show you some more recent examples that many of our students, members that have applied this course are actually using and applying to their own candlestick trading. Remember, once again, for those of you who may have joined us a little later, if you have any questions, kindly wait till the very end of today's presentation to ask, and I'll go over all your questions, okay? I have a lot of slides to show you, and I think a lot of great examples here. Let's start out with stocks for the stock traders out there today. As we can see in this example in Humana, Humana's going up, right? Okay, there's been a nice trend coming into June to the upside. So conventional wisdom tells us what? Candlestick patterns are reversal patterns, right? So if we've been going up, we're looking for a bearish engulfing pattern as we have here. And even though bar number 1 in that 2-bar pattern is down, that's okay. All we want to see is that bar number 2 engulfs bar number 1's open to close range, which it does, okay? And it closes to the downside, so that is a bearish engulfing pattern, all right? Now this is the way traditional ways of trading candlestick tell us to trade it. So let's say you take that short signal and you apply the pet D and you go, oh my goodness, what did I do here? I went short, but both the bars are green. In order to go short, bar number 2 has to be red. But as we can see here, the bar started turning green about 3 or 4 days ago. And as you can see, look what happened the very next day. You would have had a nice loss on your hand. So rather than that, if the bars are green, what are you looking for? You're looking for bullish engulfing patterns, as we see here. Now you would have bypassed that first signal to sell and taken this one. And as you can see, in the next 3 days, you would have had a 12-point gain. So what most traders do is they'll take the first one because they've been taught, you know, we're looking for a top, we're looking for a reversal, and they wind up losing money and say, boy, these candlesticks don't work. What I'm trying to teach you today and open your eyes up today is that there is a higher level of consistency if you trade candlestick patterns within sync with the trend. If the trend is up, you're only going to be looking for bullish engulfing patterns. And the trend is down, you look for bearish engulfing patterns. Okay? The only trouble is everyone has a different idea of what the trend is. In my opinion, the pet D is the best tool for identifying the short-term trend. How about HRB? Well, people would look at this and say, well, Steve, there's major support here. The institution site that I follow on their blog, they say that there's real good support here. You see how we can't go any lower? And there's some really good news. I think the earnings are coming out next week in HRB. They're supposed to be really great. And even besides that, there's a lot of buyers out there. So I like this stock. I'm going to look to buy this, okay? All right, so do we listen to any of this stuff? No. Why? Because it's all outside sources. Don't listen to outside sources. Take it from someone who did. I used to do this my first year or two on the floor, and I didn't make a dime. So even if I was on the floor and I had all this trusted knowledge of news and knowing where the book was and all my stocks, how come it didn't work for me? Is it going to work anymore for someone sitting at their home office and just having a TV in front of them? So if it didn't work for someone who had advanced information and had hundreds of thousands of dollars behind them, how can it work for just the average trader? Don't listen to those things. There's no consistency in them. That's why we don't believe in chat rooms or trading rooms. That's why we don't look at news. We don't tell our traders to look at news. In fact, we don't even tell our traders to turn on the financial TV stations. I don't look at them, so why should you? Okay, and I've been trading for nearly 40 years. All right, so let's say you wanted to trade HRB to the long side. Well, here's what our students would do. The first thing they would do is apply the pet D. And as they can see, the last 2 or 3 weeks have been red. In fact, out of this entire example, only 3 bars have been green. Not enough to tell you that you're in a sustained upward move. So there's no reason you would even think about buying. And it would have been a good idea had you had the pet D, because look what happened, okay? Now at this point, someone's saying, okay, wow, boy, I took a big loss there. Well, I'm going to just sit to the sidelines and not do anything. This is what adds to your inconsistency, because while you're licking your wounds, you're also missing some great opportunities because you're too gun shy now to get back in the market. If you had the pet D, you would have never had a losing trade based off the information you had before, and you would be looking for any type of candlesticks that are in sync with the downward trend, such as this bearish engulfing pattern right here. So that would have been your first setup to go short, and guess what? 8 points to the downside. And the beauty of this is when there's a nice sustained trend, if you miss that first setup, well, there are also more to get in, as you can see here with these other bearish engulfing patterns. Let's look at Apple. Okay, this is Apple coming into April and then coming into May. Originally coming into the end of April, Apple was in an uptrend. Someone looking at this would say, well, Steve, yeah, it's easy to see you're in an uptrend. Looking back in hindsight, anyone could tell you we're in an uptrend. You're right. But how would you have liked to know that an uptrend was going to be established well back here, a good 20 points lower? Well, you had the pet D. And we had consistent green bars all the way here at 101. So we knew that from then on, we were only going to be looking to buy. And look at all the chances you had just using bullish engulfing patterns. Let's say you had taken this very first signal at basically 102, and you're tracking it, you're still long, but all of a sudden, what do we have here? A bearish engulfing pattern, all right? A bearish engulfing pattern, and bar number 2 is colored red by the pet D. So that's confirmation to sell. So you exit this trade, you made a nice 7 points, and you can do so. You can either sit on the sidelines, or if you're more aggressive, you can say, well, now I'm reversing and I'm going to go short. And it would have been a good idea if you did, because middle of April coming into June, 20 points to the downside, okay? All because you had a very nice confirmation here with the bearish engulfing pattern. Now, obviously, this is the way most people will use it and say, well, Steve, that's the way I was taught. We had a reversal pattern at the very top. You're right. But the only reason we traded this was because the pet D gave us confirmation. There are tons of tops that are never made using candlestick patterns in their conventional way. So increase your odds, even if you're picking tops and bottoms, by applying the pet D. Let's look at this smaller price stock, El Pollo Loco. Once again, someone could say, well, Steve, there's support here. The guys in the chat room I go to say that this is where the institutions are buying. Okay? Well, we don't care about that. The only thing we care about is the short-term trend. Once we added that, we see that there is a bullish engulfing pattern here. And the reason why I show you this example is to show you that not everything works 100% of the time. The beauty of our strategies is that when you do have a small loss from time to time, oftentimes, not promised and not guaranteed, but often we see that it is quickly recouped by the next signal once you get back in sync with the trend. As we can see here, you would have purchased off this technique, of the candlestick technique or any other candlestick technique, you would have gone long here, El Pollo Loco, and then once the trend changed, you see here that there was a bearish engulfing pattern, and the trend is obviously to the downside, so you would have exited for a 1.5 loss. Okay, it's a very small loss, but depending on how many shares you have, it could have been a large amount. But if you would have been, brave enough to take this, well, that's 2.5 points to the downside. You would have recouped your loss and then had some more positive gains on the side. Now, remember the first example I gave you in ZBH? Once again, looking back in hindsight, someone saying, well, Steve, yeah, from March to the beginning of June here, easy to see we were in an uptrend. There's no mystery about that. Once again, you're right. Everything's easy when you look back in hindsight. But wouldn't you have liked to know down here that you were in an uptrend at the beginning of March? Well, you could have if you had the pet D. You simply added it, and you see that all the bars were green at the end of February coming into March, and these were all the bullish engulfing buy setups. So just based off the very first one, that's 23 points in 3 months, all right? There's nothing you had to look at any news. You didn't have to look at any economic indicators. You didn't have to go to any chat rooms or trading rooms. You didn't have to watch any trading gurus on TV. You didn't even have to go to any webinars. All you had to do is apply the pet D, apply technique in sync with the pet D, and increase your odds for success. put the power back in your hands, and welcome consistency into your trading. Now, a lot of people say, well, Steve, this is great. Okay, I've heard you do these webinars before, but the news supersedes everything. I mean, you can't go in the way of news. Obviously, if you're buying and some bad news comes out, the stock's going to drop to the downside and you're going to get hurt tremendously. Well, I'm not going to argue with that. That is true. That will happen from time to time, just as, it's just natural. But it's been my experience trading this style and this technique with the PET D for nearly 40 years that oftentimes the PET D will get you in advance of the news and in the direction of the news announcement. Here's a perfect example, something that just happened this week. All right, and we all heard that Microsoft was buying LinkedIn for $26.2 billion, okay? This came out the 13th, which was Monday of this week, okay? Good news, right? Fantastic news. People usually say, boy, I wish I would have known that. I had no idea. I was thinking about this stock, but I wasn't checking it out because nothing was really happening. Boy, I missed that. The stock went up tremendously off of that news. Or even worse than that, people are saying, boy, there was no sign this thing was going to get bought out, and I'm short, and I got killed. I'm losing a lot of money because I got short, and got caught shorting LinkedIn. This is the way traders usually trade, myself included. This is what used to happen to me all the time until I started using these simple but consistent techniques. So let's show you what LinkedIn looked like prior to that announcement. It was in a small established uptrend, but it wasn't really enough of an uptrend to know that it was going to get bought out. It was just kind of an rangy uptrend, a very quiet, coming from February all the way into this announcement in the middle of June. Okay, but how could we have known that we were in an uptrend with some level of consistency? Add the PET D. And in this past 3 months, only 4 bars have been colored red. The majority of the bars are green. So just based off that, we know we're in an uptrend. So we know we would have at least never been short LinkedIn. Now, it didn't tell us to buy it, but at least we knew we should only be looking at this from the buy side. You could have applied any strategy. It doesn't have to be this, what I'm teaching you today. It could have been a strategy based off of something you've gotten in a different webinar. It could be something you've devised. It can be even a strategy based off of the full moon. It doesn't matter, as long as it was only telling you to buy, because LinkedIn's short-term trend was going up, as identified by the PET D. Now, if you wanted to use this simple technique I'm sharing with you today by using engulfing patterns, well, look at all the chances you had to go long. These are all bullish engulfing patterns all the way back to April, telling you that you could have purchased the stock way back then. And if you were using it for a larger investment, well, guess what? That's 70 points in 2 months. Now, did the CEO of LinkedIn call us up and say, hey, Steve, tell all of your students to go long because we're going to get bought out, okay, by Microsoft. So I like your little company there, and I think it would be nice if you guys all got long. No one told us that. Did we look at the news and the earnings reports with LinkedIn? Absolutely not. I have no idea about them. Did we watch any news or go into chat rooms? Did we look at the institutional investors? Absolutely not. Only thing we look at, and the only thing we encourage our students to look at, is the chart in front of them, because that's really all you need to look at. There's nothing else that you need to base your decisions off of. Now, you can also apply this to ETFs. Here's an older chart of the spiders. This was coming into this year in December. A lot of you, if you've forgotten already, at the very beginning of this year, we had a major sell-off the first week or two into 2016. A lot of people were saying, boy, I didn't see that coming. I lost a lot of money. If you had this simple technique, you could apply it to the spiders. At least you could have used this as a market identifying tool, because we have here a perfect bearish engulfing pattern. Okay, only one green bar out of all these bars at the end of December, and look what the market did. Okay, so there's no reason to be a victim and to claim that, boy, the markets are too big for the small guy like me to do anything. Because if you know what the market wants to do, if the trend is, it's easy to be in sync with it. How about bonds? Okay, well, here's a monthly chart of the bonds coming in from last year, July of last year. What do we have here? We have a perfect bullish engulfing pattern, and it meets traditional wisdom here as well, because it's at the bottom of a downtrend. So you can say, well, this is a reversal pattern. Sure, you're going to see it every once in a while, but we don't care about reversing. All we care about is that bar number 2 is colored green, as it is here. So that's our signal to go long bonds. And bonds have been going up into this month, as you see here. That's a current chart of the monthly chart of the U.S. bonds, 30-year bonds. How about soybeans? Now, I don't trade soybeans. I used to trade them a while ago, but I haven't traded them in years. As we look at this chart, this current chart in soybeans, this was in April. Once again, someone looking at this for the last 3 or 4 weeks would say, Steve, there's absolutely no trend in soybeans. I have no idea what to do. And I see 2 bullish engulfing patterns here, but that's not the way I was taught to trade, bullish engulfing patterns. We're supposed to see those at the bottom of a downtrend. The market's been going sideways. We can't go long here. Who says? All we need to know is that the second bar in that 2-bar pattern is colored green. So all we do is apply the PET D, and both of those bars, the bar number 2s, are colored green. So that's all we need to know. We don't need to know what the reports are on soybeans. We don't need to know if we're in an uptrend or a downtrend. All we need to do is apply the PET D and check out soybeans coming into this last week. Once again, if you missed the first couple of setups, the market always gives you second chances. It's always asking you to come on board. Here's what the only trouble is. Most of us are taught the opposite. We want to do the opposite because we want to pick a top or pick a bottom. I tried to do that. Trust me, I tried to pick a bottom during the crash of '87, and I think you know what happened to me during that day, okay? So it doesn't work. It'll work every once in a while, just the same way if you're at the slot machines in Vegas, you will get winners every once in a while. But over time, they're designed to give you this false sense of security by giving you a small win every once in a while. But really, over time, you have nothing to show for it. They have the least odds of any gaming facility at the casinos in Vegas. It's the same way with picking tops and bottoms. We can apply this to crude oil coming into February of this year. Obviously, crude oil was going lower. The only people that lost money in crude oil were the people trying to pick a bottom. But had you simply applied the PET D as we see here, we knew way back in November of 2015 that we were in a downtrend. All of the bars were red. All we have to do is look for bearish engulfing patterns, and bearish engulfing patterns all along the way down. All right, let's look at the E-mini S&P. I know not all of you trade commodities or stocks, so let's look at the E-mini S&P. I'm going to start out with what happened last week. This is a 10-minute chart of the E-mini. As you can see, the first part of the day we went straight up. The second part we went straight down. I know a lot of people are saying, well, Steve, this is where I get hurt. I start to think we're in an uptrend and then I get killed when the trend changes. That's the beauty of the PET D. It is so finely tuned that it's not designed to get you in at the top or bottom, but it's designed as an early warning trend device. As we can see here, coming into this day, the bars were green all the way up. But then well before the market fell out of bed, it was giving you substantial warning that we were headed lower. So as we were going up, well, we had these nice bullish engulfing patterns, and that's about 3 points in your direction to the upside, and you could have stopped and reversed at this downward move right here. There was a bearish engulfing pattern confirmed, and then 5 points to the downside. So just by applying this simple technique, that's roughly 8 points or $400 in one day, just trading one contract. Traded 10 contracts, that's $4,000, okay? How about a 60-minute chart? This is just last week as well. Here's a 60-minute continuous chart of the E-mini. I'm going to show you how easy it is to just use this to follow and get in and out and stop and reverse at the different trend changes. As we see here, this was on the 8th. There was a bullish engulfing pattern. You could have gone long, followed it all the way to this rally up here, and then once you saw a bearish engulfing pattern, that's your exit point. You stop and reverse, and now you go short. And now you're short until you meet a bullish engulfing pattern. You cover your short, you go long, and as you're going long, you see that you started to go up a little bit, but then you're met with a bearish engulfing pattern. So this probably would have been a small loss or probably just a break-even trade, but then as we can see, we stopped in reverse and started to get some nice gains to the downside. Had you taken every one of these signals in the last 3 days on an hourly chart, well, that's 27 points in just 3 days, roughly about a little over $1,300 just trading one contract, okay? And we're not saying that everyone would have gotten in exactly at the same place, but we're just showing you how much consistency there are in these techniques. Now we've just showed you the E-mini. Now I want to share with you what happened yesterday and coming into today. Let's look at a 15-minute chart of the E-mini. This was a 15-minute chart. This was actually on the 13th, which was Monday. And as we can see, we had all the bars red here on this 15-minute chart. You could have taken this signal and carrying the position, if you were able to hold it on to the next day, which was yesterday, that's 20 points in your favor. Now, let's say you had held it until you met this bullish engulfing pattern, which was yesterday. You could have entered there, and as I took this snapshot this morning, just about an hour before we began, that was 12 points to the upside. Okay. Once again, we're not saying you would have exited exactly at the bottom and gotten in and exited exactly at the top of that run, but we're just showing you how much room you have to work with once you're in sync with the trend. Now lastly, let's look at the Forex markets for all you currency pair traders. Let's look at a daily chart of the euro dollar. This is an older chart. As we see here, we're kind of going up. We have a little sell-off, but we're met with a perfect bullish engulfing pattern. All right. Now this meets traditional wisdom standards. We have a small little pullback, but we're not going to trade based off that solely. We have to confirm with the PET D. Bar number 2 has to be colored green. So we add the PET D, and we can see that all the bars have been green except for this one, and now bar number 2 is. So this gives you the confidence to take the trade. Had you gone long, guess what? 600 pips in the next 3 days, roughly $6,000 per contract. Okay? We can also intraday trade this. Here's a 60-minute chart of the British pound. This was this past week on the 8th, coming into, I believe, yesterday. Okay? As we can see here, looking in hindsight, the British pound has been going lower. Boy, wouldn't you have loved to known up here that we were going to go lower? Well, if you had added the PET D, you would have known. Look at all the red bars. The market is always telling you what it wants to do. You just need something to translate it. That's what the PET D does. It's a perfect translator for what the market wants to do. So you would have known well before the British pound fell out of bed that we were in a short-term downtrend. So all you have to do, if you just want to use one of the simplest patterns, is to look for bearish engulfing patterns. Here's one, here's another one. And taking all of these, well, that's 200 pips in just 2 days, or $2,000 per contract. So we showed you a daily bar, we showed you an hourly bar. How about a monthly bar of the dollar yen? This is going back on monthly time frame back to 2012. Now looking at this, you apply the PET D, the same rules apply, all the bars are red. We have a bullish engulfing pattern here, and bar number 2 is green. Now someone could say, well, Steve, this is not enough information. Sure it is. All you have to find out is a bullish engulfing pattern, and bar number 2 has to be green. And look what happened. 4,500 pips coming into 2016. That's $45,000 per contract if you had stayed in the entire time. And once again, we don't tell people what to do. We don't say you have to buy exactly here and sell exactly here. It's up to you. We're just giving you the tools and the tips and the techniques to increase your odds. It's up to you to make your decisions as to where exactly you want to enter, where you want to exit, where you want to place your stops. And we give you all the different variables in our courses. We give you a standard format, but then we give you different variables, advanced trading, conservative trading, different techniques, so that you can design and fine-tune the strategies to meet your needs. Once again, we are an educational company. So let's recap. Only buy or sell candlestick patterns, any candlestick pattern, as long as it is in sync with the trend. And the best way I know finding the trend, as you've just seen in examples in all markets, in all time frames, is the PET D. Trust me, I was introduced to it when I first started trading, and it has improved my trading tremendously. Why? Because I'm now not swimming upstream. I'm in sync with the trend. All right, now, very important points to remember. This is not a strategy, so I don't want you to start thinking, well, you know what, all I have to do is look for a trend and apply a candlestick pattern in sync with that, and I don't need to have the PET D because that's all I need to know. Well, sure, you will increase your odds for success, but we didn't really go into the other important pieces of the puzzle, like advanced entry signals. We didn't talk about exactly where you're going to be entering. We have a number of ways to enter using this technique. We also didn't talk about stop placement. Remember, I said not every trade works. I showed you a couple examples where they didn't work. The beauty of this is that you'll be able to recoup your losses, but what if you didn't know where to place your stop? What if your small loss turned into a great loss? Well, we teach you this in the course as well, but we didn't talk about that. We didn't talk about where to exit. We didn't give you any exit examples. Now, sure, I showed you how much room you had to work with, but I didn't share with you different exit points along the way. And lastly, we didn't talk about money management. How many shares should you be trading? How many contracts? You know, that's an extremely important piece of the puzzle that we didn't cover at all. Now, here's what I want to share with you today. We have a great deal, discounted deal for all of our attendees today. We are offering you what we call our Candlestick Combo. This is strategy number 5, which is based off candlesticks, along with the PET D. This is one of our most consistent packages to date because it applies what I just shared with you, even though I gave you a small portion of it, but we give you all the basic standard format rules as well. In other words, we talk about entries, we talk about different exits, we talk about different stops as well. Now included with this is the PET-D to confirm your trades, your candlestick trades, along with 4 different trading techniques I share with you as well, entirely different from what we just went over. Now this combination includes both the add-on, so it will generate a buy and sell arrow when a signal is generated for strategy 5. It will also generate and color the bars automatically. But remember, the buy and sell arrows for the strategy are for educational purposes only. After you've studied and I've mentored you for a while, you'll be able to spot these signals on your own without the use of an outside source. Remember, we don't want you to rely on anything to tell you what to buy or sell. You have to make that decision. So we just offer this as an educational tool. And we also offer as an educational tool signal alerts. So after you've been studying this for a while and kind of get the process under your belt a bit, we give you signal alerts as an educational tool to know what to look for as you're paper trading. For example, here's something that was emailed on the 1st of June for entry on the 2nd if you're a standard conservative trader. As we see here in this stock in Aetna, okay, this email was issued out to all of our members during the 1st of June, and I believe that was just a couple of weeks ago. It was a strategy number 5, buy setup. So if we look at the chart right here, we see that Aetna has been going up, and once again, conventional wisdom would tell you, well, the stock has been going up. This is where you want to look to sell it, right? Because obviously all the indicators are overbought. The trading room I go to says it's too high. It's hit resistance, so we can't go any higher. And all the institutions are selling. So we've got to exit this. Once again, we don't listen to any of those things. Why overcomplicate your trading by listening to these outside sources that don't even have any consistency anyway? They're too subjective. Just look at the market in front of you. A buy setup was signaled in Aetna on the 1st. Okay. Now, in order to really feel confident to take this, you want to confirm it with the PET-D. So all we have to do is apply the PET-D. Guess what? It's been confirmed because the setup was colored green. So that would have given you the confidence to go long Aetna, and the stock went up 8 points in the next week. Okay. Now, we don't care about what's going on with the company. We don't care about what people are saying. We just look at the chart in front of you. Keep things simple, and you'll get on that road to consistency a lot quicker than by overcomplicating your trading. So we provide you with these signals as well, but only for educational purposes. After a while, you won't need them anymore because you'll be able to know exactly when something is generated, when a signal is generated, and when it's confirmed because you have the PET-D and Strategy 5. Now, with these these great tools we have here, the strategy number 5 along with the PET-D, we call them our Candlestick Combo. Now, if we sold these separately at ProTrader Strategies, my sister site, they have it marketed for close to $4,000. That's how popular these are. Here's what we're doing today for all the attendees. We're dropping the price down to $14.95, a one-time payment of $14.95 plus $97 per month. This is a great deal because trust me, $4,000 is a lot to come by. But let's say you said, you know what, Steve, I don't want payments. I don't want to have any type of payments. I just want to outright pay for it. Well, if you want to have a lifetime access to both courses, we've dropped that by $1,000 down to $29.95. So this is a great deal, and included in all of this is 40 years experience, my personal mentoring to you, where you can contact me and correspond with me anytime you like with any questions. And this is lifetime correspondence because now you're a student of mine and you have 40 years of experience teaching you and mentoring you along the way. So here's how to take advantage of this. Once again, I will give you the information right here. Go to my sister site, which is ProTrader Strategies. You can email them at trading@protraderstrategies.com. Call them directly for any type of a payment plan you're interested in putting together at 310-598-6677. And the link to the sign up is right there directly below the phone number, but it's not a live link. If you'd like to go to a live link, if you simply go to the chat box on your far right-hand corner of the GoToWebinar page, you'll see a chat box right there, and they have posted the live link. All you have to do is click that on. It will automatically take you to the sign-up page, and there's a lot more information about what's offered in the course, the combination course as well, okay? I'm going to leave all this information up there. Remember, this is a great discounted deal So take advantage of this because it's only for a limited time only before we move on into other strategies and other techniques. But this is probably one of our most consistent techniques for trading candlesticks along with the PET-D. This is called our Candlestick Combo. All right, I'll leave this up here, and I want to thank you once again for holding off on any questions as I open up the question and answer box. As I see here, we have a lot of students and members from all over the place. Oh, I see Mahmoud is here. He's a great student of ours. There's also Bruce from Texas. Let's see here. Let's see. Elroy says HRB has 3 green but went down. Well, I'm sorry, I don't have that chart in front of me, but remember, it has 3, but even so you have 3. What you're looking for, and we teach you in the course, you want to see at least 3 to 5 bars. And remember, you're not trading the PET-D. As I stated earlier, the PET-D is not a system, it's not a strategy. The PET-D is simply a finely tuned trend identifier. It's telling you the direction of the market. So what you have to do once you know the direction, you have to apply some structure. So even if you see 3 green bars or 3 red bars, depending on what side of the market you're on, that's not enough just to stop and reverse. You have to apply structure. Now in today's presentation, the structure I talked about were bullish engulfing patterns. So you were looking for those. All right. So remember, this is where students have difficulty. They say, okay, I got this PET-D. All right. Hey, there's the first red bar. So I guess I sell. That's not the way it's supposed to be properly used. In fact, that's incorrect. It is a trend identifying tool. Once you know the trend, just like if you go into a river and you see that the current is going a certain way, then that's the direction you swim. Okay? But you still have to know how to swim. So once you know the trend, that's the direction you trade, but you still have to know what to look for. You have to have some structure. Well, guess what? The Candlestick Combo gives you that structure. This is the beauty of it. And this is all gone into more detail within the course, okay? Remember, if you happen to miss the entire presentation or having difficulty, contact Pro Trader Strategies here. There's their email address as well as their phone number, and they will send you a link to this recording, okay? One of our best students, Mahmoud, he's saying, thanks, Steve, for your efforts. The best indicator that I've seen. I am still gaining profit from that wonderful indicator. Just today, I got from the DAX index 1800. Wow, that's great, Mahmoud. Mahmoud is a great student of ours, and just like everyone else, months ago, he had never heard of the PET-D, he had never traded with it, and he's having some great consistency in his trading. So once again, he was unsolicited. He's a great student of ours, and I've corresponded with Mahmoud. Another thing, as I stated, along with this combo, you also get correspondence. Mahmoud will email me from time to time asking me questions or what I think of a certain setup, and I will correspond with him. This is what you get included with the combination. 40 years of experience as a personal mentor to you as well. DTS, do you take the 50-period simple moving average into consideration when looking at the bullish engulfing candle? Well, that's one thing we do. I don't want to go too much into detail on that right now because that's more of the conservative way to look at it. But yes, you can. There's nothing absolutely wrong with using a moving average, okay? And we go into that in the course, but thank you. Mahmoud asks, can one use PET-D with Thinkorswim platform? Yes, you can, Mahmoud. You can, but you have to use it, alter it just a way. Because of the way Thinkorswim is set up, they don't allow us to display the PET-D on their charts, but it's really easy to get around that. All we do is we splice some of the data feed from Thinkorswim, which is perfectly admissible. They allow us to do that. And we put it onto a NinjaTrader platform, which we provide free of charge for all of you. We give you a free NinjaTrader platform, and all of our techniques, methods, strategies, the PET-D, are easily accessible on the NinjaTrader. So we set that up with you free of charge through our great tech support department. This is all handled through Pro Trader Strategies and their tech support. So they can have that up and running for you in just a few moments, and it'll all be set up. There's nothing you have to do. So you can just toggle back and forth between Thinkorswim and the NinjaTrader platform to see what you want to do. It's that easy, that simple, okay? And just to let you know, for all of you who are probably asking the same questions about what platform you can use this on, let me just go over the list. You can use all of our techniques and strategies and the PET-D on MT4, if you happen to have that, TradeStation, which is what I primarily use, Metastock, NinjaTrader, Sierra Charts, Interactive Brokers, FCXM, And as I stated, Thinkorswim users can use live free data, stock data to run from on NinjaTrader free, and we set that all up for you. So those are the major platforms that we have on all this, and it works perfectly on all of them, okay? Let's see, I'm trading binary options. Can I use this for both Forex, indices, and blue chips? Sure, Daniel, you can use it for anything. As I stated, I just shared with you Forex charts, I share with you indices, I share with you stocks. It works on any market that trends. All right, so if you're basically looking at a 50-cent stock that just goes sideways for 10 years, well, you're not going to really get anything, and that's okay because the PET D will not formulate enough colors in a certain direction to generate any setups with anything. So that's okay, it'll keep you out of trouble. But anything that trends from bonds to crude oil to options to Forex, anything, indices, you will see setups, you will see the trend. And that's the beauty of this, okay? Yes, you can apply it to MT4. As we just said, it works on MT4, TradeStation, Metastock, and NinjaTrader, and Sierra Charts, Interactive Brokers, FCXM, and Thinkorswim as well, along with the NinjaTrader platform, okay? DTS, do you put more emphasis on bigger bullish candles versus smaller bullish engulfing candle with the PAT D? Well, personally, I don't, but once again, our whole, philosophy is to have you become a part of the process. So through your studies and research of our techniques and strategies, if you have found some correlation with, with bigger bullish candles as opposed to smaller ones, well then fine, there's nothing wrong. In other words, you are not editing the entire format of the strategy and going off left field and doing something to alter the strategy altogether. As long as you're staying within the basic guidelines, that's fine. You can say, well, I only want to trade the smaller, more bullish engulfing candles as opposed to the bigger ones. That's fine. There's nothing wrong with that, okay? The only thing that is wrong is if you trade a strategy or a method that doesn't fit in with your personality or with your nature. That's why a lot of students lose, is because you go to a chat room or a trade room, or you listen to some outside source telling you what to do, and it's not really your nature. It's not your personality to buy or sell this or that certain time frame. So you don't feel comfortable, and ultimately you lose because you're trying to mimic or follow someone else's personality. What we encourage is for you to study and research our methods, find what works for you. As long as you're using the basic guideline, that's okay. We have a number of traders who use this candlestick combination, and some swear by it by only trading on the Forex markets, only using tick charts, and only applying the more advanced way. Whereas others say, no, it works the best day trading stocks, I use it more conservatively, and I use a more aggressive exit. There's nothing wrong with either one. The only thing that's wrong is when you trade or you try to mimic someone else. That's why we don't believe in trade rooms, because traders will turn that into a crutch and you'll try to trade like someone else. And trust me, after someone who's been trading 40 years, that is a recipe for disaster. We don't believe in those things because we feel we'll be doing you a disservice by giving you, the setups for that day and telling you this is what you have to trade. We only offer strategies with signals as an educational tool, just as if your teacher shows you the answers to a quiz so that you know what to look for. But we're not in any way trying to tell you how to trade, okay? DT is asking, WMB is given a buy signal today. You know what? I don't have the chart in front of me. This is not a live, it's a static presentation, so I'll have to go back and check it, but I'm not really sure. I'll have to go check it later on today after we've concluded. Let's see, does MT4 provide charts for all the three different markets? That's probably a great question to ask Pro Trader Strategies. Once again, I don't use MT4. I would assume they do, but you would just have to contact them, okay? Remember, the other platforms are TradeStation, which I use, and I feel confident everything works with them, all the markets, if you've just seen. Metastock, which has all the markets and all the different time frames. NinjaTrader, which does as well, so does Sierra Charts, Interactive Brokers, FCXM, and Thinkorswim with the free NinjaTrader platform. Okay, once again now, this is a great candlestick combination offer here, because if you purchase this separately, this would most likely cost close to $4,000. We've dropped the price down to $14.95, a one-time fee, along with $97 per month. And you've just seen how well it works, but trust me, it's not about force feeding you signals, it's about educating you. So we're just trying to educate you on the subject so that you can ultimately put the power back in your hands. I've tried to show you examples in every market, every time frame, including every direction. As well, I showed you some losses, but how they were quickly recouped. I also showed you something that happened just the last few days. So you've seen the consistency in this method. Now it's your turn to step on board and become a student of mine. So here's how to do it. Once again, contact Pro Trader Strategies. You can email them. Probably the best thing would be to contact them directly, call them, or if you're sure you want to become a member right now, simply click on that link in the chat box and it will take you directly to the sign-up page with more information. In closing, I hope you got something out of this presentation today. I hope it educated you at least a little bit. So if you don't decide to become a student of mine, at least you have a little bit more education that will at least steer you in the correct direction. But if you want to take your trading to the next level, please sign up while you have that discounted price for the next couple of days and become a student of our Candlestick Combo program, okay? Thank you so much for attending today. Thanks for taking time out of your afternoon. I look forward to all of you becoming students of the Candlestick Combination and members of Specialist Trading, as well as students of mine. Thank you so much. I'll see you next time. Bye-bye.